for the education loan through their respective banks to the chairperson of the committee headed by the governor of the central bank. What else is there? A cover letter signed by the student affairs officer of your institution, and take notice, public institutions, of course, universities, polytechnics, and co. And the head of their respective institutions, the vice chancellors for university students, the rector for polytechnic students, and the provost for college of education students must be submitted with the application. Let's quickly take that card again if we have it. Let's quickly run through it so that our viewers can see. These are the key takeaways. So if you're hearing student loan, you don't understand what it is. What we've done this morning is to break it down for you. So just take a moment, take a few seconds and take a look at it. That is the Nigerian Education Loan Fund. Of course, we're still expecting the president to make pronouncements on appointment, of course, those that would handle that. All right, that's it. I hope you've taken note of that. Now, let's move over to another big story. Yesterday afternoon, we saw NEC coming out, saying that there's an increase in electricity tariff. NEC is the Nigerian Electricity Regulatory Commission, and it has approved an increase in electricity tariffs for customers under the Band A classification. The vice chairman of NEC, Misili Oseni, stated that the increase will see its customers paying 225 naira kilowatt per hour from the current 68 naira. So what does that 225 naira mean? That's about 15 cents kilowatt per hour. NEC further noted that with the newly approved tariffs, subsidies for 2024 are expected to reduce by about 1.14 trillion naira. Let's just halt there a bit and let's quickly take you through what you're seeing right there on the screen. Of course, the electricity tariffs for Band A, our customers have been increased, and power distribution companies allowed to raise prices to 225 from 68 naira. The 225 now should be about 15 or 16 cents. The tariff hike actually takes effect from this April. Now, the NEC has also come out to say that Band A customers are 15% of customers, and that 15% consume 40% of the electricity. Some Band A customers have actually also been moved to Band B. Now, according to the service-based tariff of NEC, that's SBT, NEC classified consumers based on the number of hours of electricity consumed. Of course, Band A, a minimum of 20 hours. So take a listen and know where you fall in. You know, because sometimes when we get to hear government do all these pronouncements, they seem to be so esoteric, and we don't, an average Nigerian may not even understand what is happening. And you can just be walking on and say, oh, they don't increase light, they don't increase light. Where do you actually fall in? And that is why I'm taking this time out to do this explanation and analysis. So NEC categorized consumers based on the number of hours. So the number of hours you have light, listen, Band A, a minimum of 20 hours. Band B, a minimum of 16 hours. Band C, a minimum of 12 hours. Band D, a minimum of 8 hours. Band E, a minimum of 4 hours. Let me take it again. Band A, a minimum of 20 hours electricity supply. Band B, a minimum of 16 hours electricity supply. Band C, a minimum of 12 hours electricity supply. Band D, a minimum of 8 hours electricity supply. Band E, a minimum of 4 hours electricity supply. Someone will now ask, okay, Nancy, I know they get light, which 1 hour? Where do I stand? I really don't know. I'm not NEC. But this is the categorization according to NEC. But I feel, of course, you will take a look at where you fall. Electricity sector has really been plagued with a lot of dislocation, dysfunctionality since the privatization. That is one sector that we've still not gotten a handle of, despite the billions and billions of naira, if not even dollars, that we've spent in that sector. All right. Let's quickly move ahead. The Nigeria Customs Service has recorded a decline of 15,999 in the volume of single goods declaration for the imports in the first quarter of 2024, and the decline has been blamed on the fluctuating import duty. It's also announced a 122.35% increase in the first quarter 2024 revenue when compared to the same period in 2023, stating that it raked in 1.34 trillion naira between January and March this year. So much about the customs. Customs has been said, are you a revenue generating agency or are you a trade facilitator? But that's a topic for another day. All right, let's take a quick look at the market. Negative sentiment still continue to hold sway. Our all-share index dipped by about 32 basis points to settle at 104,181.32 points. And this was attributed to sell-offs in bellwether stocks like banking, insurance sector also. The year-to-date return fell to about 39.33%, while market capitalization closed at 58.91 trillion naira. If we move over to the money market, it showed some kind of improved liquidity with about 562.79 billion naira credit as interbank rates rose due to OMO auction settlements, with OBB and overnight rates closing at around 25.3% and 25.1% respectively. Now for the Treasury bills market, it was bearish after the announcement of the OMO auction, where CBN floated 500 billion naira across 3 different maturities. The bond market experienced bearish trend with Q2 bonds auction calendar release, yield settling at about 19.19%. Euro bonds showed a bullish trend despite anticipation of U.S. macroeconomic reports. Now for the naira, we've seen it strengthening. Yesterday it finished at 1,262 naira 85 kobo to $1 at the NAFEM, and this has been attributed, of course, to what we've seen the Central Bank of Nigeria do in the last few weeks. Don't forget, was it last week or so, just before the holiday, that the Central Bank of Nigeria allocated $10,000 to each BDC after, revoking the licenses of about 4,197 BDCs. So our hope and prayer is that the naira continues to strengthen. I really want to say naira that is lesser than 1,000 naira. How can that happen? That should be a question for the CBN Governor, Layemi Cardoso. Okay. Now, if we move over to African markets, not just him though, because it takes not one or two now to tango when it comes to economy, because there's little the monetary policy really can do. The fiscal policy also need to come up with economic policies that will attract investment, as well as the dollars, trade policy on one hand. So, anyway, so in this case, it takes 3 or even 4 to tango, because the 4th person now will be us Nigerians, what our behavior, our money behavior, do we expect, do we, we have so much respect for the dollar than our own naira. I don't blame us too, also because of the high inflation we've seen in the last few years. But perhaps we just need to take a chill pill right now, especially with the strengthening of the naira that we're seeing, our attitude, what's our behavior to import, to foreign goods and all of that. But the other argument is that we also need to support the industrial sector or the manufacturing sector to be able to do more made in Nigeria products. That's a topic for another day, but I needed to chip that in. Now let's move over to the African markets, where we're seeing that the Zimbabwean government is expected to launch a structured currency this Friday to mitigate the ongoing currency exchange rate volatility in the country. Zimbabwe is one country that has suffered. Is there anything like hyper inflation? Perhaps, that is one country. For the past 20 or 25 years, as far as been covering this, Zimbabwe has not been economically sound. That is one country that you go into the country, other countries' currencies are used, the rand, the greenback, which is the dollar, and, any other. So let's see what the Reserve Bank of Zimbabwe will do. Also, Senegal's new president, President Faye, announces oil and gas mining sector audit reflecting high hopes for change in the country. Now, if we take a look at U.S. stock futures, they were mixed this morning following 3 consecutive losing sessions. European markets were a bit higher, while Asia-Pacific markets rebound as investors analyzed remarks by U.S. Fed Chair Jerome Powell. Of course, he spoke yesterday. And this is really very important, especially our officials here in Nigeria, because whatever they say is also seen as policy. For Jerome Powell, and even other central bank governors or even other policymakers around the world, when they speak, the market, takes a cue from that. So for officials here, you must be careful of what you say because it can affect your currency, it can affect your economy, it can affect markets and all of that. So let's see how that goes. But for all prices, we're seeing that prices are rising with Brent crude trading at around $89 51 cents a barrel. Just before I came into the studio, what you're seeing now is 88,133. Of course, that market oscillates. Gold prices surged to a new record high following remarks by, of course, Fed Chair Jerome Powell on inflation concerns, like what I mentioned earlier. His remarks impacted the gold market. So let's be careful of our words. Like the Holy Book says, God created the world with words. So we should be careful with our words. All right, let's quickly take a break. And when we come back, we'll be looking at the matter of recapitalization. Of course, is the financial landscape in Nigeria going to change, especially with the recapitalization plans for the banks by the Central Bank of Nigeria? We will critically dive deep into this issue after the break. Do join us again. All right, welcome back to the program. It's still Moneyline with Nancy on African Independent Television. My guest is joining me right now. He's Mr. Olusoji Oluwole, who is the National President, Association of Senior Staff of Banks, Insurance and Financial Institutions. Good morning, Mr. Oluwole, and welcome to the program.
Good morning, and thank you for having me.
Now, let me start from I read, a report quoting you, I don't know, that you said that this recapitalization will cause job losses as Nigerian banks battle to meet the recapitalization plans. Was that from you? If it was from you, why do you think so?
I think that was just a sensational headline. That wasn't what I said. I was asked a question on the impact of the recapitalization on the employment of workers. And my comment was that at times like this, when we look at the example of what happened in 2005, that jobs were affected then, and we expected that jobs may be affected at this time. And the effect on jobs is on the condition of mergers and acquisitions taking place in the banking sector by 2026. And my comment was that if indeed that will happen, then the organization should also ensure that those affected are well compensated because they are being asked to leave their jobs due to no fault of theirs, but due to certain factors that will affect their employment at the point of the merger or the acquisition.
Is there panic? Is there some sort of panic right now in that space? Because, of course, your association, senior staff of banks, insurance, and other financial institutions, for the banking space, is there a panic going on in that space?
Not at all. There isn't any. However, we've made our concerns, like I mentioned here, known to the Central Bank, to the Federal Ministry of Labor, and to the Trade Union Congress.
Why did you say there's no panic? Are people not afraid of job losses, just like you mentioned earlier? Or perhaps people would also now be thinking of a plan B. Because in the banking sector, for example, we see a lot of people that have jackpot, especially those in the IT department and all of that. So that's why I'm asking that question, that whether there's a panic, but then number two, perhaps you're seeing a level of plan Bs from staffs to say, whether the next 2 years go hard, oh boy, I go begin think of where I go to. You have conversations, with your colleagues and all of that. So I really want to check the temperature of what's happening there.
Well, right now, it's too early to start talking about panic. We're talking of a circular that came out barely 1 or 2 weeks ago. Yes, indeed, yeah. The CBN governor had hinted about, this last year. And the CBN has also said that they want banks to roll out their plans. So I think we should wait for those plans to be rolled out, for them to be made public before we start thinking of panic within the system. Remember in 2005, we had almost 100 banks. At this time, we have barely 25 banks thereabouts. So what chances are there that there will indeed be mergers and acquisitions? And again, when we look at it, for the kind of numbers that we're looking at, between 20 billion and 500 billion, depending on the type of bank that you are operating. And we're talking of bigger institutions, we're talking of bigger businesses. For all you know, there may even be a shortage of staff. So it's too early for us to start talking about panic. But that does not mean that we should not make our concerns known at this point in time, because we should not also foreclose the possibility of job losses occurring right now. And then you mentioned the Japa syndrome. It's affected the financial institution very gravely. A lot of good hands have left to other parts of the world. So perhaps, just perhaps, by the time this recapitalization ends, there may actually be places for those ones who have left to actually come back into the system.
What happened in 2005 when the consolidation was done for banks to raise their capital from 2 billion to 25 billion that time. We had over 100 banks. Now, of course, we have less than 30 banks. Do you also see, as an association, perhaps you and your colleagues in the association have also done a bit of modeling or a bit of scenario planning, that if this thing is even done between now and 2026, do you see a chance that, of course, Nigerian banks will be bigger and perhaps they would even employ more people? Because we saw over 100 banks in 2005, without so much capital base. If breeze blow, they shudder. But this one, we are even like trying to build banks that are too big to fail, as it were. So do you think that we may see perhaps an increase in jobs? Of course, I heard you clearly also when you mentioned that there could also be a scenario whereby you don't even have competent staff to employ in the bank. So are you saying if this is done, more jobs will be created in the space, more opportunities also in that space, across some even different, there's AI now.
Yeah, it's not impossible, and it's interesting you brought the AI issue in because we had spoken about the AI matter as well in the past, about how AI will impact on jobs. And for us, what we see and the challenge we have thrown to organizations is that they need to retool and reskill their staff, because AI is still going to be managed by human beings. Where AI has a problem, it's human beings that are still going to come back to solve those problems, because we're talking of programs that may suddenly decide to have minds of their own. And we can't say that they're totally infallible. Errors may occur, things can happen that will require human intervention. But back to your question, yes, I still stand on it that there may be chances of increased chances, because like you said, when we are talking about 200 billion naira for a bank, I mean, imagine the kind of business that bank is going to have to take in, the amount of customers that they are going to have to deal with, especially in the area of providing credits, providing loans to them, and getting deposits from them as well as other activities. I mean, things have gone very electronic now. So in all those areas, in expansion, there will be a need for people. And then if you look at the plan that has been drawn out by the CBN, I think it is something that is even more comprehensive than what we had in 2005. 2005 was very, very clear. It was very, very clear. Raised 25 billion up from 2 billion naira. Here, this time around, it says that, for each segment, this is what is expected from you. And you have the choice. First, you have various options of raising the capital base. The second is that you have an option to want to upgrade your license or downgrade your license. And then you now start talking about mergers, you now start talking about acquisitions. And right now, the environment is even looking more attractive for investors, not just within Nigeria, but from outside Nigeria. So perhaps we are going to find foreign investors who are very interested in the banks that we have in Nigeria, the kind of businesses that they are running presently and what they foresee in future. And so, like I said earlier on, it's early in the day. Perhaps in the coming months, the tone could change, the drive could change, but then we will know, because the plans would have been set out, and we'll be able to assess it better.
Do you think that this timeline given by the Central Bank of Nigeria to the banks to recapitalize is enough? 2 years from now till 2026? Or is this timeline also would be like a lag? Because we don't know what will happen in 2 years. When I was taking a look at the exchange rate component, for example, of course, we saw in 2005, 2 billion to 25 billion naira. That time was about 100 naira or 120. Now we're having an exchange rate of 1,270 something as at yesterday's NAFEM. Of course, the naira has been strengthening lately. And when I did my calculation for like 500 billion, which is the highest, $393 million for the banks to capitalize in terms of dollar equivalent. So is this timing enough for them? And is the time also a lag? Because we don't know what will happen between now and 2 years. I'm not predicting doom for the country. But economic cycles come and go. We don't know what will happen. So we also need to take a look at this. What do you think?
Yeah, I honestly share your thoughts in that direction as well. When the CBN governor first hinted the issue of recapitalization last year, one of the concerns we had at that time was that a recapitalization cannot happen when we do not even have a grip of the value of our own local currency. And then, of course, we saw what happened from January up to recently, where the dollar went as high as 1,800 naira, and even the availability was a problem itself. Now we see the circular coming out shortly after shortly after the seemingly stability of the naira. Now we expect and we want to believe that the government and indeed the CBN are confident that they have attained a level of stability. And yes, you are right, because we cannot determine what's going to happen in the next 2 years. But we want to assume that they actually know what they are doing, what they are saying, and will be able to maintain that kind of stability. So yes, the 2-year time frame, I think, is sufficient. The last one was 18 months. But with this 2-year frame, and at a time when the investing public is better educated now, more knowledgeable than they were 19 years ago, 19, 20 years ago. I believe that within the 2-year time span, banks should have been able to roll out their plans. We don't expect them to raise all that money in 1 month or in 2 months' time. They've given them enough timeline. And having hinted that thing since last year, I also believe that the institutions would have started putting plans in place to raise the kind of capital that they will require depending on the band that they fall into.
Now, let's break this down now, and I would want you to help me do that, especially for our viewers. The central bank circular, the central bank plan for recapitalization of the banks, of course, international spread for banks that have international spread, 500 billion naira, you have 200 billion naira, you have categorization. Just please explain to our viewers what this means. And perhaps if you have an idea of what categories of banks fall into all of this, so that our viewers can actually know, okay, my bank, my regional bank, or my bank will have to raise this amount of money. Because not everyone really understands some of this English and technicalities, you know.
Yeah, so I'll start from the lowest band, which basically will be the non-interest banks.
Yes.
I think the non-interest banks, yeah. So those ones fall within the category of the 20 billion. I'm sorry, I'm running this out of my head right now, so forgive me.
I would help you. Just go ahead. Yes.
Yeah. So we know what the non-interest banks are, what some people refer to as Islamic banks.
Yes.
Right. So something like that, yeah. So they are the ones that fall within the 20 billion naira capacity. Then we talk about the merchant banks. I can't remember what the value for merchant banks are, but merchant banks are basically wholesale banks. They are not the regular banks that you go and open savings accounts or current accounts with, and you go in and deposit and withdraw. They deal with bulk sums of money. You won't find them having ATM machines, for example. You know, not the day-to-day bank that you pay your salary in and you put your savings accounts in. Then that takes us to the regional banks. I think the regional banks are within the 50 billion capacity.
Billion, yeah.
Now, regional banks are the regular commercial banks. Yeah, they are the regular commercial banks, but their presence cannot go beyond a certain region. So if we want to use the Nigerian geopolitical zone as an example, let's say, for example, that they fall within the southwest, but I think the CBN will determine what the regions are actually, where they can be physically present at any point in time. Then we now move on to the national banks. National banks are the same commercial banks, but being able to have physical presence in every part of the country, just like we have most of the banks today. And then moving up to the 500 billion naira mark are the international banks. International banks are the ones that have presence both here in Nigeria and have presence in other parts of the world within Africa, Europe, and America.
Okay. So for the non-interest banks, of course, you have the regional that will raise about 10 billion, for national 20 billion, then the, for national 20 billion, then the merchant banks 50 billion naira. So that is the categorization there. So do you foresee like mergers and acquisitions? Why I'm asking this question now, let me just situate it, because these are banks, and I think we need to call their names really, because we also have access to their financial statement over the years. So we know how these banks are doing. They come up with their results, they give dividends and co, they do AGMs and all of that. Now, if we are saying perhaps there will be mergers and acquisitions, why may you be thinking so? And let me situate my question. We've seen a few new banks come out in the last few years. The Providuses, the Globus, help me now, you know, but you know what I'm talking about. And some of these banks do not even have national spread, as it were. So what do you think about mergers and acquisitions, if they will come in this space?
Well, first, we need to look at the kind of licenses that each of these banks have. So some may actually just have regional licenses. Some may not necessarily have national licenses or international licenses. And you know, if you look at the circular even took cognizance of institutions that already have provisional licenses and those that are still in processing. So for those who have provisional licenses, they fall within the band that you are talking about right now. Now, to be talking about mergers and acquisitions now, like I said earlier, and I think it's still too early. CBN has said, present your plan. Let us know what you want to do. I think from the presentation of those plans and those plans being made public, we will be able to start determining or start thinking about which ones will want to merge. Today, like I said, we have just 25 banks. If we're talking of mergers and acquisitions now, how many banks are we going to reduce to, with the size of our population, with the size of businesses that are going to come in?
But if you have big banks, sorry to cut you short, if you have big banks that can afford it, and they feel that they can also buy up other banks, you know, to be bigger and perhaps for even more spread, you know, do you see that as a concern? If for example, a regional bank has spread, of course, region, like the Providus I mentioned, I think has a regional license. If, for example, a big bank that has an international spread wants to like expand further and say, okay, this is an opportunity, don't you think it will happen if the money is right?
I think we need to look beyond money. There are other factors that you need to look at. You need to look at culture. You need to look at the type of business that the bank is focused on. You know, there are a lot of factors. You know, the mergers that happened in 2005, for some banks, it took them up to 5 years to be able to have a uniform culture. You are talking about having people, if you walk into certain banks today, blindfolded, the moment you walk in and you start hearing some things, you can tell it off your head the bank you are in. You know, so talking about mergers and acquisitions is beyond the big numbers. Yes, Bank A may have all the money that is required to acquire Bank B, but Bank A will also be interested in the health of Bank B to know if there are sinkholes that they need to block, if there are traps that they need to avoid. So there are a lot of things that will be looked into. So I think it's beyond, it goes way beyond money at this point in time.
What lessons can we learn from the consolidation of 2005 for this recapitalization?
I think a major lesson is that you need to start early. There is that probability that at that time, people thought there was going to be an extension. People thought that that it will even be cancelled completely. But all those things did not happen. And then secondly, for the general public, I think that came with a lot of skepticism at that time. And right now, on the side of the investing public, I think they need to start preparing for that consolidation, because it's beyond it goes beyond the banking institutions themselves, because the money is going to come from the investing public. I think with better knowledge now, the lessons we will learn from that time is that yes, it may be very, very profitable to get involved in that area. And then I think with the circular that came out, the circular seems to have come out with a lot of lessons learned. I actually tried looking for the document of 2005 at that time. Yeah, to look at the document that came out talking about the capital recapitalization, and looked at the document now. Unfortunately, I couldn't.
The network is not too friendly at this point. Let's see, Mr. Oluwole still there. Can you hear me, sir? Okay. Let's take a break, shall we? To see if we can reconnect with Mr. Oluwole there. And we're really talking about hitting a nerve there. But let's quickly take a break. We'll be right back.
We can do it. We can build our country for the sake of the millions of the people. Delivery, yes, we must achieve it.
It could seem impossible because you don't dream big. When you have this mentality of an achiever, nothing is impossible.
So don't take on too much commercial or private debt so you can service. Any country, if you can service, if you're generating enough revenue from investing that money, fine. But if you're not, you have to be extremely careful, because debt relief is not easy.
Hard decisions have been taken, and they are required to help us, because the central bank can't do it on its own. It has to work very closely with the fiscal side.
All right, welcome back. Mr. Olusoji Oluwole, the National President, Association of Senior Staff of Banks, Insurance and Financial Institutions, still with me. Sorry, Mr. Oluwole, for that network glitch. Can you hear me now? Mr. Oluwole, can you hear me? Can you hear me? Can you please unmute? Okay, it seems he can't hear me. Perhaps let's try to, reconnect. But before while we wait for him to reconnect, of course, we're speaking about the bank's recapitalization plans. Of course, the guidelines released by the Central Bank of Nigeria just a few days ago for banks that have international spread. They are required to recapitalize to the tune of 500 billion naira. For those that have national spread, 200 billion naira. For regional banks, 50 billion naira. Then we'll have merchant banks, which are also, the banks would also recapitalize in the tune of 50 billion naira. Then we'll move to the non-interest banks. That's the Islamic banks. That's the popular one, so that you understand. But non-interest banks, even Christians, or still also bank with Islamic banks. So for non-interest banks, national, 20 billion naira. Then if they are regional non-interest banks, 10 billion naira. Okay, Mr. Oluwole, you're back now. Can you hear me?
Yes, I can hear you.
Can you hear me now?
Yes, I can.
Okay. Now I can hear you. Sorry, I was just giving our viewers an overview of the recapitalization plans again. So please land on your point, because you were saying earlier on that you were trying to get documents from the 2005 consolidation plans. I saw a few, though, but just go ahead. Yes.
Yeah, like I said, what I saw from the current document is that there seem to have been some lessons learned from the last one. Because at that time, the fiat was just there, go and raise 25 billion. But this one is well articulated. It states how you will raise it. It states that you must roll out your plan. So a lot of things are going to happen very, very early at this time. And as you know, about this time is when banks are going to start rolling out their results of 2023, and it's probably going to form a major part of the decisions that are going to be made at their annual general meeting. So again, we probably don't have to start talking about extraordinary general meetings immediately. These are things that are going to form part of their discussions at this point in time. And like I said earlier on, we have 2 years. 2 years, we should take it as sacrosanct. It's not going to change. And then I want to believe that before the expiration of the time, everybody would have known where each bank is specifically.
Okay, I'm taking a look at the guidelines for this one. We're not talking of 2005 now, so I don't want to go back to the guidelines of 2005. You've actually enumerated the lessons that we've gotten from the 2005 consolidation exercise. But I'm taking a look at the central bank document, and it says it's telling the banks that to meet minimum capital requirements, banks may consider any of these 3 options: inject fresh equity capital through private placement, right issue, or offer for subscription. So that will be for the stock market side. We will see a lot of activity perhaps between now and the next 2 years about that. Mergers and acquisitions, he did mention that. Then upgrade or downgrade of license authorization. So if you feel that you can make so much money, you upgrade. If you feel that your hand no feel richer, you downgrade, as it were. Now let's move over to this. For existing banks, the CBN said the minimum capital specified above shall comprise paid up capital and share premium only. For the avoidance of doubt, the new capital requirement shall not be based on shareholders' funds. And this has been like a sticky issue, because I had a guest yesterday, Mr. Chukwu, and he was speaking, talking about, you see that even the shareholders try to put more money back into the business, as capital. Doesn't that count for anything?
So what CBN wants is fresh funds coming in, although there have been different schools of thought relating to that part of the document. And an example is what you raised here. I recall reading somewhere where someone raised concern about retained earnings, that these retained earnings are usually funds that should have been paid as dividends. Maybe you make
$1 billion and retained earnings. Yes.
Yeah. So CBN is saying no, that it must be fresh funds that are coming in. So I believe that these are things that are probably going to be discussed at the various annual general meetings of the institutions, and we'll see how it goes. For those that are injecting funds, investors that are injecting funds in, it could be counted if fresh shares are created for them, but not just injecting funds in as debt. I recall that one of the things that banks are prevented from using again for this capital is issuance of debt notes for maybe they decided to raise bonds and so on and so forth. So things are not even included either. So what they are saying is that anybody who brings in money has an equity in that institution as well. So rather than going to say a bank in Europe to bring in $1 billion, for example, what it is expected is that they are bringing in that money as an investment in that institution, and they become part owners of that institution.
Okay, let's take a look at another issue, which is from the central bank. Notwithstanding the capital increase, banks are required to ensure strict compliance with the minimum capital adequacy ratio requirements applicable to their license authorization. Mr. Luwale, are you still there? In line with the extant regulations, banks that breach the CAR, which is capital adequacy ratio requirement, shall be required to inject fresh capital to regularize their position. Of course, we know that the CAR in that banking space now is about 10 to 15%. Of course, that is gotten from dividing the bank's capital by its risk-weighted assets. So do you see a conflict there, as it were?
Not particularly. What CBN is saying, I don't think is anything different from what has been a rule in the past. I think the CBN is just coming out to say that they are going to enforce that part of the rule that exists right now.
Okay, let's take a look at this. between now and 2026, I know you've alluded to it a bit, that let's wait and see. But we also need to put all the cards on the table. Is there a risk of any bank failing? Or, because of the structure of AMCON now, and the bridge bank structure that the NDIC works in tandem with the CBN, we may not see any bank fail?
Well, the failure or the survival of a bank is not something that one can just talk on just like that, because something will lead to the failure. It could be just one simple transaction that leads to that bank's failure. And I think that is even part of what the CBN is trying to preempt, saying that you need to raise more money to be able to stand firm. And recall, you said something earlier on that, you said it jokingly that one small breeze and everything collapses.
Yes.
And we're talking about the tier 1 and the tier 2 banks today. But what I see here is that, one, we're heading towards a situation where every bank can be referred to as a tier 1 bank. However, right now, with the kind of monitoring that takes place with the regulators, and the regulators being the CBN and the NDIC, it's going to be hard for any bank to just suddenly collapse. We've seen in the past where the CBN has moved in to take over some institutions and simply change their management to ensure that they continue to run their operations. Unlike what happened in the past, where you suddenly wake up in the morning and you get to your bank and you find the doors shut, or the doors are open and you find out that you cannot carry out any transactions, or your transactions are failing. But that is a totally different thing now. The activities of those banks, of all banks, are being monitored, and where the need arises, the regulator will immediately move in to forestall any unpleasant event.
Okay, 1 minute left for us to end this program. I've also have people ask me, Nancy, I borrowed money from banks. How do you think this would happen? What do you think will happen to people that have taken loans from banks? The loan recovery process now, do you think that the banks will be so aggressive? Then the second dimension of the question is fintechs, digital banking. What do you think? There's microfinance banking, but that's a different issue for another day. The guidelines, CBN have not spoken about microfinance yet, so I don't want to speak about that here. So just speak.
Okay, yeah. So quickly on your first point, any bank that knows its onions well would have tied up all loose ends when giving out loans. And like they always say, recovery is usually the last item in the process, because if you start putting recovery as your first thing, then you already know that you are giving out a bad loan. So it's expected that those loans are supposed to perform. But where it does not perform, then obviously every institution will be aggressive in recovering its money, because remember that the money being given out as loans does not belong to the bank. It belongs to customers as well, because it's their deposits that are being given out as loans to customers. And then down to the fintechs, I believe that every fintech actually operates using the license of an MFB. The only difference between the fintech and the MFB is that while the MFB operates from a brick and mortar environment, fintechs are just there on your devices for you to operate.
Okay, I think we'll leave it at that. Thank you very much for joining us today and, for your insights. Thank you very much, sir.
Thank you, Nancy. Right.
All right, I've been speaking with Mr. Olusoji Oluwole, who is the National President, Association of Senior Staff of Banks, Insurance, and Financial Institutions. We've been looking at the recapitalization of banks. But of course, between now and 2026 is quite a while. We'll continue to monitor the situation, and we'll keep you up to speed on this program. This is your flagship business program. I am Nancy Naji. Be the best you can be. Put a change that you want to see. I'll see you all again tomorrow, same time on this channel. Bye now.